This chart appears to display a price action trading system, likely utilizing supply and demand zones or support and resistance levels, combined with trend line analysis. Here is a detailed explanation. 1. System type: price action trading. The core strategy is centered around price action, PA, meaning decisions are based purely on the movement of price on the chart, rather than relying on complex indicators. 2. Key components of the strategy. A. Supply and demand, support and resistance zones, the rectangles, purples. The gray and blue, shaded rectangular boxes represent zones where buying, demand, or selling, supply, pressure has previously been significant. Gray boxes, often used to highlight areas of consolidation, sideways movement, or ranging, indicating areas where price paused or reversed. These can act as future support, floor, or resistance, ceiling. Blue, shaded boxes, seem to highlight specific impulse moves or areas of strong volatility that originated from a key price level. These often mark the true supply, demand zones or areas of strong institutional interest. Trading logic. Traders using this system look for the price to retest these zones. If the price breaks above a resistance zone, that zone often becomes new support. If the price breaks below a support zone, that zone often becomes new resistance. B. Trend lines. The diagonal lines, purples. The diagonal black lines are trend lines. They are drawn connecting a series of lower highs for a downtrend or higher lows for an uptrend. Trading logic. They define the direction and momentum of the current move. Traders look for price to bounce off the trend line for continuation trades. A break of a major trend line, as seen in the middle of the chart, often signals a potential reversal or a shift in market structure. See confirmation and execution, the check marks and X's. Green check marks, check mark. This likely indicates successful trade entries or exits, or simply confirm that a specific level, like a zone or trend line, was successfully held or rejected by the price. Red X's, times. This typically indicates a failed setup or a losing trade. For example, the price might have broken a zone that was expected to hold, resulting in a stop-loss hit. 3. Overall strategic approach. The trader is likely attempting to identify market structure, determine if the price is trending, using the trend lines, or ranging, using the horizontal support, resistance levels. Mark key zones. Draw the gray and blue boxes, supply, demand, consolidation areas. Wait for price confirmation. Wait for the price to return to these marked zones or trend lines. Execute trades, reversal trades, trading the bounce of a zone or trend line. Breakout trades, trading the move after a clear break of a major zone, with a retest of the broken level for confirmation. Risk management. The red X's imply a defined risk management plan where trades are exited if the market moves against the setup, a stop loss. In essence, it is a disciplined price action approach to identifying high probability turning points and trend continuation areas on the chart.